Well, hello everybody, and welcome to the first episode in 2023 of the ESG and Tech Show. My name is Susan Hayes Cullerton, and I'm delighted to be here with you to talk about a very important and relevant topic today that has investors wondering, how can you truly combine investability and sustainability? And we're very much going to have a conversation about that. I'm going to first of all start off today's episode by telling you what this episode is going to be all about and exactly the flow of how we're going to have our conversation. And then from there, I would love to hear what part of the world that you're tuning in from. So while I'm telling you all of this and sharing the outline for how we're going to work today, please do pop into the chat where you are tuning in from. And of course, if you are looking at this and it's not live, put it into the comments also, as we love seeing those too. Now, the premise that I put forward today is, how do you find stocks that are both profitable and sustainable? What I'm going to do is start off with stocks that are sustainable. I'm going to show you a very, very easy way to find stocks that are sustainable. And what I mean by that is that they are ranked to be high in ESG, in environmental, social, and governance factors. That's where I'm going to start off. I'm going to show you a super simple way that I can bring you a list of stocks that are deemed sustainable from the point of view of environmental, social, and governance factors. Then what I'm going to do is I'm going to evaluate their profitability. And how I'm going to do that is I'm going to look at their earnings per share, but more importantly, I'm going to look at their growth of their earnings per share. What are the growth prospects for these companies? So when I'm saying that I'm going to look for stocks that are both profitable and sustainable, I'm starting with an assumption that we're going to deal with sustainable stocks. And then I'm going to build on that, and I'm going to look into their earnings capability. However, I'm not going to stop there. Then what I'm going to do is show you how to read a sustainability report. Now, just a couple of weeks ago, we launched my new show, Savvy Investors at VectorVest. And during that show, I showed you how to read an earnings report. So today's episode, we're going to talk about how to read a sustainability report as well. So that truly, as you become part of this organization, part of this VV Nation community, then you're going to learn more and more all the time in a more holistic way about checking out your stocks. Okay, so that is the way in which we're going to go. So going to take a look over here in the chat. So Tommy says good morning, and good morning to you too, Tommy. I am delighted to see that you are joining us from New York. You are very welcome indeed. I see Eileen here puts in a bag of money emoji. Eileen, you're very welcome for a start. And also today what I'm going to be doing is taking more than one emoji. It's going to be more than money that we're going to focus on today. Not at the expense of it. Not at the expense of it at all. In fact, if anything, I'm going to show you exactly how ESG and focusing on sustainability factors can be more helpful when it comes to investing. So just want to make that point. So thank you very much for your contribution so far. I see JDT Beats is here and says VV Nation. All right, you're very, very welcome indeed. And like I say to everybody, wherever you're tuning in from, you are super welcome. We are really and truly delighted to have you. And please do make sure and check in and tell us where you're tuning in from. I see Brandon here, says hello everyone, you're very welcome indeed, Brandon. And like I say, keep the locations coming. Tell us exactly where are you tuning in from. We always love to see that, and it's always something that I like to check in with people at the beginning. Okay, now what I'm going to do, like I mentioned to you, is that I'm going to show you, first of all, a super easy way to find stocks that are sustainable. And one of the ways in which I'm going to do that, the first way that I'm going to do that, is that I'm going to show you the longest running sustainable ETF, right? The longest running social index ETF. Many of you are going to know what it is. It's been around since 2006. Its ticker code is KLD. It's been in the VectorVest system forever, well, since it began. Lots and lots of you are going to be familiar with it. That's one of the ways that I'm going to show you a list of sustainable stocks by virtue and measuring from an ESG perspective. I am just going to check in over here. I see Brandon is joining us from Cleveland, Ohio. Mark's joining us from Ashland, Pennsylvania. Cigar 70665 is joining us from the Mississippi Gulf Coast. Donald is joining us from Kelowna in Canada. JP, beginner here. Only a few months of investing experience, looking for some guidance. John is joining us from Boston in Massachusetts. Marvin is joining us from Arizona. Fireblazer99 says, good morning. My wife said that I'm not ESG friendly, that you're anti-social, okay, and that you're anti a lot of things. Well, you know what I'm going to do? I'm going to show you how to find a list of sustainable stocks, and let's see if I agree with your wife then. How about that? Mike says, hi from Orlando. I'm listening. You're very welcome indeed, Mike. VJ, hello from Canada. Let's all make money this year. Interesting, VJ. I'm going to show you the ESG index that I'm going to show you, the longest running one, as I say, since 2006, that I'm aware of in the US. I'm going to show you just how well that has been performing so far this year, and let's certainly elaborate the conversation from there. Cecilia says, hello, greetings, worksite in Lower New York City. Michael says hello from Arkansas. A Fireblazer also says they are joining us from Toronto. Wolf's mom says hi from Ontario, Canada. Mal says hi from Liverpool, UK. First person in the UK joining us today. You're very welcome. Gemini says Renee from Pennsylvania. So again, you're all super welcome indeed. Okay, now in the interests of the people who are joining me here as beginners, can I take a minute to explain one thing to you about what I mean by a social index? There are such things in the market today called ETFs. They're called exchange traded funds. Lots of people invest in them, myself included. An exchange traded fund is simply an index. Okay, so it's a list of stocks that all conform to a certain criteria, and it's an index that it's investable. So that means that a fund was created to track this index. Now, I do want to make a point though, is that an ETF is typically passive. What that means is that the fund solely invests in the index. That's all it does. There aren't fund managers employed to be able to analyze the stocks. Nothing like that happens. The fund pays for access to the index's listings. Then the fund goes and buys the stocks in the weight, WEIGHT, in the weight that they appear in that index. And simply the fund's job is to track that index. That's what I mean by an ETF. And an ETF, as I say, tracks an index typically passively. In other words, it doesn't decide, do we want this stock, do we not? Do we more weight this stock, do we not? It simply follows that index. So what I'm going to do, first thing that I'm going to do, is I'm going to show you the longest running social ETF. I'm going to show you the stocks that are in there, and then we're going to take a look at those stocks for their profitability for a start. Then I'm going to show you some other indexes. One in particular stood out to me for a specific reason. And then, as I say, we're going to go on from there, delve into the stocks themselves. But then I definitely want to bring it back and I want to analyze a sustainability report. The one I've picked is Google. And Google's parent company, of course, is Alphabet. I picked that for 3 reasons. And you're going to have to stay tuned with me to know what those are. So that is what I'm going to pop on over here and do now. Brian says he is here from Vancouver. Carrie says greetings from Colorado. Andy says he is here from Dallas, Texas. Francisco is here. Good morning from Chicago. Marvin said very supportive of ESG, but have had a hard time making money from it. And Sherry says is joining us from Arkansas as well. Okay. I'd love to keep hearing your thoughts on ESG. I really would. And I'd love to hear your thoughts on the sustainability reports that we're going to talk about. I would love to hear your thoughts on all of the above. So first of all, come on over here and I'm going to change my screen and I'm just going to bring you to a particular piece that I found in Forbes. Now, look, these are not hard to find, these articles where you find that profitability helps sustainability, sustainability helps profitability. The reason for that is companies that have good sustainability typically tend to have strong relationships with their customers and their suppliers. They are, of course, and should be well able to tell their customers, their supply chain, their investors, their governments, their stakeholders how well they're doing. That makes everybody not just feel good, but also because of their respective requirements around sustainability, that also ties in well, but why they can continue to do business. Also, of course, it helps for brand reputation. It helps for retention of staff. It helps for a variety of things. Everything I've said to you helps profitability. Of course, if you take care of your staff, from an S, the S of ESG, of course, if you take care of your staff, they're more likely to stay, they're more likely to be happy, they're more likely to bring an equitable contribution to the table. So it's not hard, it's really not hard to be able to explain to you why sustainability and profitability go hand in hand. But that's me sitting here telling you in theory. What I want to do is I want to put forward the business case for the investment case. Okay, that's where I want to look at it. But I read this particular piece. It's from a Forbes article, and particularly down here, it said a recent study by my company being the author in question, said the ROI Marketing Institute about sustainability practices in the US. It involved 581 interviews conducted in 2021, showed that 96.7% of respondents have a sustainability project in place in their organisations. To be honest, I thought it was going to be more. I really did. But anyway, not the point. As you can see, vast majority of companies are doing something in sustainability. But what I wanted to bring you today is who are the companies who are practicing most in terms of ESG from an investing point of view. Now, that brings me very neatly over here to this ETF, right? This is the ETF. It's the iShares MSCI KLD 400 Social ETF. Now, iShares, just to explain this to you very briefly, iShares is the ETF provider. MSCI KLD 400 is the index. And quite simply, it is the top 400 companies in the US in terms of, as you can see down here, composed of positive environmental, social and governance characteristics as identified by the index provider. If you want to get into the nuances of what determines a good ESG stock by virtue of this index, then you need to go up here and take a look at the prospectus. Now, the reason I'm not going to do that with you today is because A, I've shown you now how to get at it, but B, the reason that I picked this ETF is not because it was the best in terms of ESG, it's because it is the longest running. I can find better for you. I will find better for you. I have found better for you, and I will show you how to do that as well in a couple of moments. But it is important to start off from the point of view of something that has stood the test of time. Now, when I go over here and I take a look at our comments where people are saying, I've had a hard time making money with ESG, there you go. So far, this particular ETF has delivered 9.69% year to date so far. Okay, so this year, so far, that is where this particular ESG ETF has delivered. The expense ratio over here is 0.225%. That means for every $100 that you might invest in this ETF, then it costs 25 cents in costs. Now, of course, I'm aware that there are people here from Canada. I'm aware there are people here from the UK. You, of course, may not be a dollar-based investor. So as a result, like me, who's a euro-based investor, as I'm streaming this live from Dublin. So as a result of that, we then would also have to take into consideration that 9.69% also would have, when we take into account currency conversion, that may be different. So again, I just want to acknowledge that. Okay, now I'm going to scroll on down here, right? We can see here what the sustainable screens. And again, the purpose of today is not to explain what a sustainable screen is, or not exactly to get into the nuances of the ESG behind the index. My job today is simple. That is to show you profitability and sustainability combined. So like I say, I have a very simple way of finding stocks that are sustainable. Going to come right down here to the sustainability characteristics. As you can see, AAA here, we have got an MSCI ESG fund rating. The specific stocks though that are in this ETF are right here. They're there. Number one, by a mile, is Microsoft. So Microsoft here is deemed the highest stock in terms of ESG. However, it's not just the highest stock. It is actually very significantly so the highest stock. The weight of Microsoft in this ETF is 9.7%. In comparison, the weight of the next stock, Alphabet, is 3.3%. So it's actually 3 times the weight. That's what it is. And then as you can see, going on from down here, we have Nvidia, we have Tesla, we have Visa, Procter & Gamble, Home Depot, MasterCard and Merck. Now, of course, you might say to me, well, yeah, Susan, but if you look up here, when you take into consideration that we have 2 versions of Google, one is the Class A and Class C share, then that would all practically double the percentage representation. Fair enough. So we've got Microsoft and we have got Google. But what I think in particular is interesting here is you can see there's such a distance between Microsoft, Google, and the rest. Like I mentioned to you later on in the episode, I am going to go through the Google sustainability report for you as well. So stay tuned for that. Okay, so if we were to take this list and now we were to come on over to the program and we were going to take a look at who's in this list from the point of view of profitability, what would we do? Well, let me then bring you over here to the program right now. Lorna is joining us from San Diego. Lorna, you're very welcome. And Farblazer says, my weight is passive and it goes up with time. Does that make me an ETF? No, it doesn't. No, it doesn't. An ETF is, as the name suggests. Okay, so what I'm going to do now is bring the program over here to the screen. Now, I've created the watch list already here for you. If you were doing this yourself, let me show you how to do it from scratch. Here I have my homepage. So I have set up my homepage on VectorVest in such a way where I'm looking primarily at market timing indicators. In the event that any one of you does not have access to VectorVest, can I ask Joey to put a link into the chat, please, so that anybody who wants a trial of the system can go ahead and take it. If you might just drop that link there into the chat, Joey, that would be great. For anybody who does have VectorVest, you will find this really easy for me to follow. Okay, so what I'm going to do is I'm here on my homepage and now I'm going to go into viewer. Then I'm going to click on my watch list viewer over here and then I'm going to create a watch list. Now, as I say, I've already done this, so I'm just going to type in the name of what I've called this watch list. You can do this whatever way you want, but I've put this as sustainability, and profitability. Okay, so I have done that there. And when you press add, then the one that I've created appears there in your VectorVest watch list. Now, in here then, what I did was that I added my symbols. So first thing I did was MSFT. Okay, so here is Microsoft, and then I press comma. Next I put in, for example, well, Visa is in there. I press comma, Merck is in there, and I typed in the ticker code for Merck, etc. Soon as I press enter, then my stocks appeared. So you can see here now that the stocks that are in that ETF, here I have them. I brought in the top 10. They're all appearing here. However, now they're in a different order. Now they are in a different order. The different order this time is that they are in order of VST. Now, for those of you who are not familiar with what VST is, that is value, safety, and timing. It's a specific VectorVest proprietary indicator that we have. And within that indicator, we look then at long-term price appreciation potential. We look at consistency and predictability of financial performance. And we also look at the direction, the magnitude, and the dynamics of those share prices. All of that is baked into that one pie, and above one is favourable, below one is unfavourable. What I said that I was going to do though today is I was going to look at profitability. So I'm going to come over here and I'm going to look at two metrics. I'm going to look at the growth of the earnings, and I'm also going to look at the earnings yield, right? So let me start off here with the earnings yield, because that's a more static figure. Now, earnings yield, this is a measure of how much earnings I get per dollar investment in my stock. So this means that when it comes to me investing in a stock, when I look at Merck there, the top stock that comes up here from the point of view of of the list. So this earnings yield here tells me that for every $100 that I might invest into Merck stock, in fact, as you can see, the price isn't far off that. So at the moment, Merck is $106.73. This is telling me that for every $100 that I would invest into Merck, $7.03 of that represents raw earnings. In other words, that's how much that I am paying. That percentage of the amount that I'm paying for the stock is how much I'm paying purely for raw earnings. Now, so generally, I think people prefer the PE ratio. The PE ratio is the opposite. It is for how much do I pay per dollar of earnings. So it's basically the opposite. It's the one upside down. So as you can see here, the lowest PE ratio, and the lowest PE ratio is also the stock with the highest, or with the lowest PE ratio is the stock with the highest earnings yield. Yes. So if it's simpler to think of it this way, how much do I pay per dollar of earnings? In the case of Merck, I only pay $14.23 per dollar of earnings that Merck is making. Okay, so from a value point of view here, I can see that Merck offers the best value. Then I can see Johnson & Johnson is up next. Alphabet, the stock that I'm going to analyse specifically from the point of view of their sustainability report, is next. Home Depot is next. Home Depot, I call it Home Depot. Procter & Gamble, Visa, Microsoft. Now, here's Microsoft. Microsoft is now 2, 6, 7, am I right? 7th on my list? Yep. Microsoft is now 7th on my list of value from the point of view of how much I get per dollar earnings. In terms of how much am I paying in order to get access to a dollar of earnings, Microsoft is 7th on my list. The PE ratio, as you can see over here, is 28 times, which is exactly double that of Merck. And also my earnings yield here is at 3.56%. Now, MasterCard is next, Tesla is next, and Nvidia is next. Of course, what you might ask me is that a good PE ratio? Is that a high earnings yield? Okay, it's not very easy to answer that question, but one of the ways that we can answer that question is by doing this. Let me right click on the stock. Let me get its graph. I need to move out of the way to be able to get the graph. And what I'm going to do is I'm going to look at Microsoft's PE ratio in terms of its history. That's what I often do, is I look at the PE ratio in terms of its history. So what I'm going to do here is I'm going to add a parameter, appreciation, and I would like to see its PE ratio. And now let me just pop that on. There we go. Okay, so as you can see here, its PE ratio is at 28 times. Relative to its history, this is actually, it's actually quite low relative to its history of this time last year. This time last year, Microsoft's PE ratio was at 32. And it was quite high at 32. Now, it was also at that time that the stock peaked, as you can see. Then from there, now Microsoft, had, like many tech stocks, had a very difficult 2022. Again, like many of them. Many tech stocks. So as you can see here, it went through a couple of sell recommendations as well along the way. And then as you can see from here, then we've seen that Microsoft came off its low, and its low happened on the 4th of November 2022. And from there, that low was $221. Today, the price is 268. Yeah, and that's, of course, we are live, and this is a real-time price, and it is 11:23 a.m. Eastern time. So it is currently $268.30. Yeah, well, it keeps changing because, of course, the price is live. Okay, so that's one of the ways that I like to see I like to be able to determine whether the PE ratio is high or low relative to its history. So at the moment, it is significantly lower, I would say. Significantly lower than its history based on last year. And of course, I could expand that longer. I could expand the period of time to make a determination about that. The other thing I like to do is I like to compare the PE ratio. For example, here again in Microsoft, PE ratio is 28 times. I'd like to compare that to the industry. And all I need to do that is, let me just double click on the stock. And here in the stock, as you can see, what I've got is I have, you can, there you go. What I can see now over here is I can see the list of stocks specifically in software. So in comparison, interesting. It's got the highest one of this particular industry. Next one is Adobe, and then there are a range of the others where they are simply negative. And that is because of their earnings per share. Okay, so I'm just going to close that down there. So that's another way that I can take a look at this, is I can look at Microsoft in comparison to its peers, in comparison to its industry, and also in comparison to its own respective history as well. Now, the reason that I'm delving into this now is that I am taking this, think about the brief that I have today, is how can I find stocks that are both profitable and sustainable? So now that we have picked out our watch list of stocks that are sustainable, this is where we get the opportunity to really take a look at things like value investing, or, as I'm going to move on to now, growth investing. Because if I'm a growth investor, then what I might do is I might come on over here to the growth metric. And growth is a measure of forward-looking earnings between 1 to 3 years out. Now, I'm just going to briefly right-click here because Tesla obviously here is topping the pops. I'm going to go for the second one. I'm going to go for Visa actually today. That's where I'm going to particularly focus on at the moment, because there's been a lot of talk about Tesla. I know Tesla has been analysed to the nth degree. In my last show, How to Read an Earnings Report, we took a look at Tesla simply because the earnings report was coming out the next day, but I did a really deep dive into Microsoft earnings report. So I'm just going to take a look at Visa instead. So let me right click here, and Visa with 20% growth in earnings. This time I'm going to pull up the full stock analysis report. And when I do that, by the way, anybody can get a free stock analysis report. Joey, could I trouble you again, please? Would you mind putting the link for a free stock analysis report into the chat so that anybody can get access to that, and if they want to follow me along? I'm going to scroll on down here. Here we go to GRT. So GRT reflects the company's 1 to 3 year forecasted earnings growth rate in percent per year. V for Visa has a forecasted earnings growth rate of 20%, which VectorVest considers to be very good. You can get a stock analysis report on any stock you want that we have in any database, whether it's European, US, Canada, UK, or Australia. Any one of those, you can do that. Okay, so if I'm going to pop back over here. So here we can see, in this case, I would be looking at something very different. I'm not going to be looking necessarily at the PE ratio as a determination of value. This time, I might want to find a stock that is growing its earnings pretty quickly. And as you can see here, Visa is doing so with its 20% growth rate. Now, interestingly, what I'm also noticing here is that Visa has got a buy recommendation, so does Microsoft. And the reason I'm picking up on Microsoft here is, remember, Microsoft is the #1 sustainable stock according to my social ETF, and the second one is Google. But as I look at Visa in this case, you can see that Visa is the second fastest growing stock when it comes to earnings. So we're starting off with an established base of #1, we've got a sustainable stock. #2, we're looking for fast growing earnings. #3, it has a buy recommendation from VectorVest. But #4, here's where I want to go next, is today a good time to buy? Now, what I don't have time to cover today, and I do it lots and lots of times, and Glenn will take care of this with you, and lots of us here on the VectorVest channel will happily talk to you about market timing. I'm not going to do that today. I'm going to talk about stock-specific timing. So, if I've identified a stock whereby it's sustainable, profitable, growing its profits, and it has a buy recommendation, is today the day? Is today the day to buy into this stock then, perhaps? I just want to agree with Drew. Yes, indeed, Drew. Joey is awesome. And thank you very much, Joey, for popping that link into the chat there. And that is for anybody who wants a free stock analysis report. You can take 3 on one given day. You can take 9 overall. Obviously, if anybody wants to get access to all the stocks in the database, then you can click on the other link that Joey put in there, which is the trial. You can get a trial for the whole system for 30 days, and it includes all of the stocks in the database. Okay. I see JR is asking me, how did I get the sustainable computation? JR, will you stick with me? Right, I will answer that question. I just want to go through this particular aspect first, and I'll come back to that. Okay, is today the day is the question that I'm asking of myself. Right, what I'm going to do is I'm now going to pull up the graph again, because I really only want to answer this with technical analysis. I'm going to go to the view stock graph. And the one that I'm going to look at is RT. That is the indicator that I'm going to look at right now. So I'm going to take off my PE ratio, just in case anybody doesn't have this before. I'm just going to click parameter here, and over here, and click on RT. And now, actually, I know I've been asking Joey for something. Can I ask everybody if that's okay? If you are enjoying today, if you're finding that this information is useful, will you please press the like button on the video, so that anybody who is looking for this in the future, it just helps them to find us together collectively. So if you are enjoying today, will you please push the like button on this video? And if you're not watching this live, I have the same ask as well. Of course, you can ask whatever questions you want of me. This is being streamed live, of course, so I will see them in the chat. Very happy to answer them. And also you can pop those into the comments questions. So, of course, we can all help each other along the way. But it would be super if you would press the like button. Okay, now here's the way I make decisions on whether today is the day or not. Okay, first of all, what I do is I look at the RT. And RT is relative timing. Relative timing is a technical indicator. It's proprietary here at VectorVest. And what it looks at is direction of the stock for a start. Is the stock moving up or down? Now you might say, Susan, I can see that by looking at the graph, the stock price graph. I don't need an indicator to tell me. Okay, however, what RT measures is who's winning. Is there more buying pressure? Is there more selling pressure? But the second thing, and the graph doesn't necessarily tell you this, is who is adding more, I'm using that word again, weight. Are the buyers pushing the sellers up more, significantly more, or is it moving in the opposite direction? And the third thing is the dynamics. Is the stock moving like in a really, really volatile way, or is it that it's moving smooth and simple up from the bottom left to the top right? Now, above one is favourable, below one is unfavourable. I always just like to look at the number first. And what we can see here is that the number is currently 1.25, right? As I'm sitting here talking to you right now, it is at 1.25. However, is that a good or a bad level? We prefer to use the term favourable and unfavourable. Above one is favourable, below one is unfavourable. The closer to 2 it is, then the more the stock is moving upwards with the associated dynamic. So 1.25 is significantly favourable. What I like to do though is zoom right in. Okay, let me go into a 5-day graph. Okay, I like to zoom right in, and I always like to see that RT is trending upwards. So as you can see, now I've zoomed right in here and I'm looking at 5 days of activity. And what I'm seeing here is that the RT is above 1. However, as you can see that as of today, Visa is having, hard to read from this graph. Yeah, Visa is on a down day. It's at minus 0.16%. So what I would like to see is when Visa, it just resumes that uptick of the RT. That's what I would like to see. It is above 1. It is above 1. It is favourable. So broadly speaking, it is a time at which the buyers are pushing up the sellers. Broadly speaking, that is the case. I just don't like seeing, just not a really big fan of seeing the way that the price at the moment is being pushed down. I would let the sellers just wear themselves out in a very short period of time. I don't know how long it'll last. I don't have to know how long it'll last. When that RT turns around, that'll be my signal for when I would be then taking my very specific entry point into this stock. Okay, so RT is what I like to look at. I don't like buying at all when the RT is below 1. If the RT is below 1, sellers are winning. I don't like seeing that. At the moment, I can see that the buyers are being pushed down a little bit by the sellers. So what I would just like to see is that RT picking back up again. Okay, that personally is what I would like to see. So, in summary, where are we at the moment? The question is, when you take a list of sustainable stocks, and I am going to go back to JR's question, let's take a list of sustainable stocks. Then we can look at it from 2 different perspectives. One is value, one is growth. If I'm going to look at value, I'm going to look at something like earnings yields, PE ratio. The lower the PE ratio, the better if I'm a value investor. And specifically, rather than pick a specific single number, what I like to do is look at its own history. And what I also like to do is look at its own peer group and look at its industry and compare the two. If, on the other hand, I'm a growth investor and I'm somebody who's pursuing growth and I'm looking for earnings that are growing quickly, then I would look over here at GRT. I want to see that the growth of the earnings is happening. I want to see how quickly they are growing, and I'd like fast growing earnings. Okay, so that is what is important when you want to combine the two together. Okay, now JR asks a very relevant question here, which is how do I get the sustainable computation? Okay, JR, so first of all, you're very welcome and thank you for joining us. By the way, for anybody who's just joining us, please do, we've been popping it there in the chat of people have been telling me where they've been tuning in from, so please do add in your location if we haven't heard from you so far. So what I did, JR, And I'm going to show everybody now how I'm going to find a better form of what I've been looking for. What I did was that I found a social ETF. It was not hard to find this one, KLD 400, not difficult at all. It is the longest running social ETF. In this case, as you can see, there's 400 stocks in here. And what this index seeks to do is to track the investment results of an index composed of US companies that have positive environmental, social, and governance characteristics as identified by the index provider. Okay, so that's all I did, was that I went and I found an ETF that was driven by ESG. I went and I specifically found the longest running ETF that is doing so. Then what I did was I scrolled down and I took a look at the list of stocks that compose it, took the top 10, and I noticed that Microsoft was the top one by some distance. Then we've got the two alphabets, parent company of Google. Then, as you can see, I have Nvidia, Tesla, Visa, Procter & Gamble, Home Depot, MasterCard and Merck. Then I moved across into VectorVest, populated a watch list in there, and then I wanted to take the lens of if I was a value investor looking at earnings or if I was a growth investor looking at earnings. That's what I've done, JR. That's it. That's a simple way of doing so. Okay, so, okay, Donald says, isn't RT showing a negative divergence from the 7th? All right, let's go back and take a look at that, Donald. Let me just explain what a divergence is as well. Then I want to show you a better, in my opinion, a better ETF to show me a different list of stocks if I was to be now more refined on the sustainability angle. So I want to show you how to do that. Before I do that, let's address Donald's concern. Okay. Now, I'm back here and I was looking at Visa. Let me right click again and let me pull up a graph. Tony is joining us from Ottawa, Canada. You're very welcome indeed, Tony. View stock graph. Okay, here we go. Okay. And you mentioned from the 7th. We go back a month. Let me go back. By the way, can I just check in there, Donald? Do you mean from the 7th of February? If it was the 7th of February, it would be in a single day. Now, if you mean the 7th of February, I would say I think the RT has been, relatively speaking, mirroring the stock myself. Just while I'm waiting for Donald to respond there to me, and just to make sure that I'm just going to read that again from the 7th. Okay, let me go back here for a month. I just want to explain what a divergence is, or a negative divergence is. A negative divergence would be if the stock is going up, but the RT is coming down. If the RT is coming down, it means that the direction, the magnitude, and the dynamics of the stock is moving down. And as a result, that is a negative divergence, bearish divergence away from the path of the stock. Generally speaking, when we see divergences like that happening, a divergence obviously leads to a convergence at a later stage. So one of them will change direction, whether it's the RT or whether it's the stock price. It can be a very good idea to look into that so that then you can re-examine the stock to see whether you think if it could be a negative divergence or a bearish divergence, could it be that the stock is actually losing that momentum that RT is very good at observing. So you might just let me know there, Donald, if you would just give me an update there on where did you see the negative divergence from the 7th. Okay, so I can see that there are chats going on there between you all, which is always a delight to see, and keep them coming. Okay, what I'm going to do now is I'm going to show you one thing that I spotted about the social ETF that I would prefer to be better, and then I found an alternative for that. Let me just scroll up here here we are. Okay, so here are the sustainability characteristics, and here's what I noticed. I noticed the MSCI, because of the index, the ESG quality score between 0 to 10, it was 8.7. Now, 8.7, I felt for a high ESG index was high, but not as, could I do better? The answer is yes. Yes, I could do better. I have done better. I have found a better index for you solely in the interests of sustainability. I'm going to lead you through the process of finding that. But just in case you wanted, possibly like JR might, just in case you're wondering, how do I find sustainable indexes in the first place? Let's say you want to take my thesis of looking at a sustainable ETF, an ESG focused ETF, and then generating your own watch list, etc. thereafter. How would you do that? Come with me and I'll show you. So what I did was I went to the biggest ETF provider in the world. So you can go to any of them. I went to iShares, you can go to Vanguard, you could go to State Street, any of them. And what I did then is that I scrolled on down here. I had an idea that many of you joining me today would probably be joining me from the US. And I'm going to click here on the US. And okay, let me scroll on down here. So what I did was that I scrolled on down here in the US and I viewed by category, and I didn't view by category. I could have, but I didn't. I viewed by goal. And then I clicked on view goal sustainable, press explore. Here we go, right? So in here is a list of stocks, and then you can see the methodology that powers the fund selections. So I had a look in there at the various different ETFs, and the one that I want to show you is SUSL. Here it is. Okay, SUSL, I'm just going to scroll right on over here. So this is the USA Leaders ETF. So it seeks to track the investment results of an index again, composed of US large and mid-cap stocks of companies with high ESG performance relative to their sector peers as determined by the index provider. Now, scroll on down and look what I found. Well, you probably know where I'm going on this, right? Is that I found a better ESG rating. This one was 9. The other one I showed you was 8.7. Okay, so significantly higher. Now, 8.7 to 9 may not be massive, you might think, relatively speaking. And it's not relatively speaking. But what I did just want to do was I wanted to find better. The only reason I picked KLD is because it's one that I've known forever. It's one that's been around the longest. And it's one that a lot of people are familiar with. I didn't say it was the best. I wanted to find better if better was out there. And so I did find it, SUSL. But here's what's interesting. Okay. Then what I did, as you all know, is that if you scroll on down, as you know, then you're going to find the stocks comprise it. What's here? The same. Here we go again. We have Microsoft, we have Google, we have Nvidia, we have Tesla, we have Johnson & Johnson, we have Visa, we have Home Depot, and we have MasterCard. Instead of Merck, we have Procter & Gamble. So I was very interested to see this. And this is the point I want to make, is that when you look through this as the lens of the investor, looking for better metrics can, of course, lead you to find them. But what fundamentally, and I'm using that word intentionally, what I fundamentally wanted to do though, is bring this back to the point of today's episode, is finding sustainability and profitability. So ultimately, what I was getting ready to do in preparation for today was to create this big watch list of stocks that are ranking highly in these types of ETFs. As you can see, when it came to this one, all I needed to do was pop on over here and add one stock, and that is Procter & Gamble. That's all I needed to do, populate it in there. Now you might say, but Susan, how did you end up with 10? Well, you see, the thing is that I've actually been showing you these 10, the same 10 all along, because remember, one of them is actually two of them, and that's Google. Google was there twice. So I've actually been showing you the 10 stocks that have been across both of the ETFs. Now, of course, I could go from here and I could look at European ones. I could look at UK ones. I could look at Australia ones. I could look at lots of other US-based ones. And that, I suggest to you, is a good idea to do that if that's what you're interested in doing as you bring these 2 points together. But it's how you analyse them is what is particularly key. Now, I'm just going to pop back over here. Donald says, I was looking at your intraday. Yes, February 7th. RT is up at the open on the 7th. Sorry, I was doing something else for a few minutes. That's okay, Donald. That is okay. But I'm right here and watching what's going on here. Okay, just before that, before I go to that, RT is now lower than at the open on the 7th. The price is now higher than the open. It's only one day though, but if looking intraday seems to be significant. Let's look intraday. Let's do that. Let me go back then. By a day. Yeah, I see. No, yeah, I see what you mean. I see what you mean, indeed. So, and let me just go back here. Let me go back to the open. Yeah, okay. Now, It does seem to be, as you can see here, the stock is falling. RT is holding. It's dropped again there now. Oh, sorry, it's not. It's at 1.25 like it was there before. It seems to be that the stock is catching up with the RT. That would be my own take on it. I personally, I would only be considering if I had the time to watch this, or if I was going to put in maybe a lower stop loss. Sorry, not a stop loss, an entry point. A limit order to go into the market. I would be waiting for that RT to turn around so that we could see that, just that sense of this decline here over the last couple of hours. I'd just like to see that turn around. A couple of hours being from the open. I just would like to see that turn around. And also, as you can see here, it has had a tougher day. Yeah, it has had a tougher day. All right, we're down to 230 here now. But what we're talking about here, Donald, is we're looking at seconds and we're looking at minutes. And I'm aware, obviously, that not everybody here today is going to be looking at it from that point of view. No matter what, I would always look at the RT, first of all, being above 1. Secondly, rising. And I'm just not seeing that at the moment. And I would much prefer to see that RT turn around if I was going to take a position in this stock. Okay? Now, Tommy says, my Unisearch doesn't have that ESG folder. Tommy, you must have read my mind, because that's precisely where I want to go now. Okay, let me just clarify precisely what I've done so far. Is I have created a watch list, but I'm now going to deal with Tommy's point about Unisearch, because that was, as I say, precisely where I wanted to go. First of all, I created my own folder called ESG and Tech in watch lists. How I did that was back over here in my watch list viewer. Let me just here to my watch list viewer over here, moving my mouse. When you have two screens and obviously one is recording the other, you can imagine what happens here sometimes. Okay, so what I'm going to do here is I'm going to create a new group. I created a new group. It was ESG and Tech. Within the new group, I then created the new watch list. However, Tommy, here is how we get it into Unisearch. I'm going to pop on over here to Unisearch, and in Unisearch I now need to focus on stocks whereby I can filter by watch list. That is how I pull it in to Unisearch. So I want the stock watch list to be equal to, and in here I'm going to pick that very specific one, which is sustainability and profitability. Okay. And in here, now what I'm going to do is I'm going to combine both of what I've been talking about so that we can bring everything together. What I'm now going to do is I'm going to click on stocks. And what I want is I would like for the PE ratio, I want the PE ratio, I would like for that to be below 25. For example, 25. And I want the GRT to be above 15. So I want both of what I've been talking about. I want value and I also want growth. Who said a woman has to choose? I'm going to choose. Look for both. So I'm going to go over here, REC. Greater than, oh, not REC, apologies, GRT. GRT is greater than 15. Okay. And now what you'll see, Tommy, is if I run the search, you'll see what comes up here. There's only one, Merck. So you see, this is how I've actually gone all the way from, I wanted a stock that was both sustainable and profitable. I started off by looking at my ETFs, because they're doing the work for me. They're finding the sustainability metrics for me. They're finding the weight for me. And I found the top 10 stocks in 2 ETFs that had an sustainability rating of 8.7 or above. Of those 10 stocks, I then looked at it from a value perspective and a growth perspective. But by doing this Unisearch, I've quickly brought in the two together. And here, in this case, now I can see Merck is the one that I want. Merck is actually up by 8.86% today. My RT is a 0.95. Okay, let's go in and take a look at this. Is that a 0.95 and it's rising? Or, where are we? Okay, interesting. Yeah. So if you take a look here at Merck, this is the opposite of what Donald and I were talking about there when it comes to Visa. Is here I can see the RT is rising. Okay, the RT was at 0.88 on the 3rd of February, which was last Friday. As you can see, it's now rising up a 0.95. If I was taking an entry position into Merck, I would be watching to see when that goes over 1. That would be all I would be watching out for, and I would take it from there. Okay, so that is, Tommy, I hope that that addresses your question. Okay, now the last part of what I wanted to talk to you about today is how to read a sustainability report. Okay, so let me head on over there and I want to show you a sustainability report for Google. Why did I pick this? Well, I told you I had 3 reasons, right? Number 1, actually, before I went looking for any searches, it's this. I'm just actually constantly reminded of this. Is look at the bottom of that screen. Look what it says here, carbon neutral since 2007. So it's been saying that every time that I have been Googling, it says that carbon neutral since 2007. And as a result of that, I wanted to see, okay, what's really behind all that? The second reason is the reason that I've been showing you there all along, which is that, of course, Google appears twice as the second and the third. So basically the second topmost stock when it comes to both of these social indexes that I looked at. And number 3, there's been a lot of talk about Google at the moment because they're under a lot of pressure from Microsoft's investment in ChatGPT, people's usage of it. I know personally in my own case, I now ChatGPT something if I'm looking for a piece of information, as distinct to if I'm looking for a list of websites that I can go and I can look up something. So lots of people are talking about Google at the moment. So for all those reasons, I decided let's take a look at their sustainability report. Now, Joey, one more time, can I ask you for one more thing? Could you just share the link for how to read an earnings report in the chat with everybody? This, like I mentioned, it was a conversation that I was having with all of you in my new show, Savvy Investors at VectorVest. It's a 90-minute episode, and I granularly take you through an earnings report. Specifically, the one I took you through was Microsoft on that day, and I showed you the events calendar in VectorVest as well to show you how you'll know when latest ones come up with. So would you mind, Joey, just popping that into the chat? Donald, I was delighted with your contribution and I was delighted with your ongoing conversation. So you were super. So I'm delighted that you were doing that and you were right. Absolutely good example to look at. Thank you for sharing it with me and I really appreciate, as I say, your interaction. Now, building on what I want to, the reason I've asked Joey to share that link in the chat is in an earnings report, often what people will look at is the press release and it's a good idea to start looking there. What I was then doing in that report was then I went into the 10Q filing and that's where you simply look at the numbers. I'm going to show you something similar here because I already, of course, in preparation for you today, I have already read the sustainability report, specifically the latest one here, and it's the environmental report of Google. So what I did was that I went in here and as you can imagine, if you scroll down, thanks a million, Joy, as you scroll down here, what you're going to get is the so to make sure now that you can see this as best you can. So as you can see here, it takes us through, as generally the report will, it'll take us through the highlights, right? So we can see here in 2007, indeed it was the first major company to become carbon neutral. Now, let me just pop down. I'll go back up and I'll take a look at those other points, but let me just pop down here. And then it says in 2030, by 2030, it aims to achieve net zero emissions across all of our operations and value chain, including our consumer hardware products. So then you might be wondering, hang on a second now. So what was this whole thing about being in 2007? Carbon neutral are carbon specific emissions. On the other hand, what it's looking at now is moving towards net zero, which are all GHGs, greenhouse gas emissions. And that's more the conversation that is more what people are looking at and focusing on now. Okay, now if I pop back up here, you'll also see some of the other highlights. First major company to match 100% of annual electricity. Then they talk about the sustainability bonds. Then they go on and they talk about the 66% of data center electricity use. Now if you scroll down here, there are some really interesting, brilliant achievements that Google have made. And they're highlighted very clearly, and I'm just going to point out some of them here, right? So they become twice as energy efficient, which is a big deal, right? It is a very big deal. I think this one is a really important one. 78% of waste is diverted. That's a very, very important one as well. I want to show you the one about Google Maps. 100% renewable energy, super important. 65% cumulative greenhouse gas reduction. Again, very, very important. They talk about all the lights. They talk about the 4,000 ports. But I particularly want to bring you down, to Google Maps. All right, and then I'm gonna take you away from the report and what they're highlighting, and I want to show you how to read the table of data. So I just think this one is interesting. There's 1 billion kilometers of transit results, billion kilometers of transit results on Google Maps, and as you can see here, like that, it does actually give people a way in which to find out how they can cycle between A and B, or get free, or not free, but public transport there, which is a very important point. There's 200,000 EV charging stations on Google Maps as well, which of course is very important from not just from a convenience point of view, but if you know where a charging station is, then it helps you determine whether you want to buy an electric car, because then you're going to know how far you have to go, etc. So that's all very important as well. And I want to show you one other number before we get into the table of data. That was one to do with San Francisco. Yeah, this one. From 2011 to 2021, Nest thermostats helped customers cumulatively save more than 86 billion kilowatt hours of energy, and that's enough to power all of San Francisco's electricity consumption for 17 years. So in here, like this sustainability report, specifically from the point of view of environment, is genuinely, it's interesting reading just to see the impact of, in my opinion, the second order effects of Google. The Google Maps showing me how to cycle from A to B. In Dublin, for example, there are a public system of where you can hire bikes, and it's called Dublin Bikes, incidentally, and it can show me where the next bike station is, how many docks are available, and also how long it'll take for me to cycle from A to B. And indeed, if Google wasn't doing that, well, then it would make it much harder for me to plan my route. Yes, indeed, I can also decide which way I'm going to travel and how I can make sure if I'm driving, and to see which is the more sustainable route, etc. The Nest, the Google Nest, and the one particularly focusing on energy consumption, and particularly focusing on heat. All of those second order effects, they may not immediately come to mind when you think about how Google's products actually enable us to live more sustainable lives. Now, all that said, I do want to bring you down to the table of data, because that is where the real deal actually is. So let me bring you down to the table of data, because all of that is great, all about targets, etc. Come on. Now, here we are. This is where the cookie crumbles. Here is where the real deal is, right? Because here you can see scope 1, scope 2, and scope 3. And I encourage anyone who's interested in the sustainability agenda to understand the differences between the two. Basically, scope 1 is what the company, its own carbon emissions are. And are not just its carbon emissions, it's not net zero, because if it was net zero, it's greenhouse gas emissions. Scope 2 then is through the indirect use of energy, and then scope 3 includes the supply chain and what happens downstream as well. Okay, it's a bit too technical for me to get into today, but I found a couple of interesting numbers down here. Is that their carbon intensity per unit of revenue has increased. The carbon intensity through full-time employee, or full-time equivalent of employee, has increased from 2017. The energy consumption from 2017 to 2021 rocketed from 8 million up to 18 million, and that is a megawatt hour. In addition, as I scroll down here, now the renewable energy contracts has also gone up very significantly, what they're paying for in order to get access to renewable energy. Also, I thought it was interesting down here to look at the total landfill diversion rate has actually fallen. Now, I don't think that's because there's less. I think that's because Google has grown significantly in that period of time. But it just shows you that the products that are being produced here, then not as much of those products that are being produced are being diverted. 77% is still very good, but it's still not as high as it used to be. And the water consumption has doubled as well. Then as we go down here, you can also see the number of EV charging ports at offices in the US and Canada cumulatively has gone from 2 million, 2,000 up to almost 4,000. And I just need to make sure that's that is correct. Am I right? Yeah, that's ports. Yeah, that's correct. The native trees planted has also gone from 1,400 up to 2,500. And then the equity investments as well, we can see that the combined renewable energy capacity, that level has been maintained. And also the household energy saved by Nest thermostat has absolutely soared from 17,000 gigawatt hours over here to 86,000 gigawatt hours. So that's where I would encourage you to go and to have a look, is that if you really want to understand the sustainability of a company, and indeed I have only looked today at a sustainability report specifically through the lens of an environmental report. There's other things, of course, I could look at from an ESG perspective, is that when you look at the top level numbers, generally what you'll see is what the company is doing well, and it's important to know that. What they're planning to do, and it's very important to know that. But thirdly is what is actually happening across the board, and that too is very important. So as I am now finishing here with you at this episode right on time, I want to thank you all very much for your time today. Again, to bring you through a quick summary of what we went through, I started off by showing you how to find a sustainable index driven by an ETF, and I gave you a quick explainer of an ETF, passive index, and a social index. Then I showed you how to analyze that from, well, not analyze it, to pick out the number that can show you how well it's doing from an ESG point of view, then find the stocks. It's from there we moved across then into the VectorVest system. And we looked at those stocks from two different perspectives through the lens of earnings. One is if I'm a value investor, one is if I'm a growth investor. And then progressing on from there, I took a look at some specific stocks like Visa and Microsoft, and also looked at their entry positions if I was going to take a position in those today, what I personally would look for. Then I showed you how to go back and take another look at another ETF, populate in those stocks into the watch list, and then from there build your unisearch according to what you personally might want. And then we finished up by looking at a sustainability report, an example of one, like an environmental one. Go beyond the top level report, the top level press release type of highlights. Go into what the goals are, but particularly the table of data is where to look. And that's where then you can really make your decision. So on that note, thank you to every single one of you who joined me today. Really appreciate it. Like I say, it's our first ESG and Tech show of the year. Join me for our next show with me. It is going to be the next Savvy Investors VectorVest. I'm going to be interviewing the very famous Steve Chappell. But what we're going to talk about is the crux of what are really important investing lessons to learn. I'm going to be putting some tough questions to him as well. So you're going to learn all about the pitfalls of investing, where people learn the wrong things, how people unlearn the wrong things, and most importantly, of course, what are the right things. So make sure and tune in. And of course, the way in which you'll be reminded of all of these is to click the subscribe button, particularly hit the bell, so then you're notified of all of the things that we do. And of course, in addition, you'll know of all of the content that is streamed live here on this channel. And one last thing, as Luke says, wow, now after this much work, I don't know how I'm going to sustain myself awake for the next few days. Well, Louis, that is what I'm here for, is to make sure that I give you the best possible return on the time invested here with me throughout. So thank you very much. I am going to take that as a compliment. Roger says always good information. Thank you very much indeed, Roger. Delighted to hear that. And indeed to you all. Thank you all for being here. I'm going to see you at our next episode. Thank you. Please do push the like button. Have a super week. Bye-bye.